Hello and welcome back to our channel where we discuss all things finance and investing. Today, we'll be talking about Ray Dalio, one of the world's most successful investors and founder of Bridgewater Associates. He is known for his unique investment strategies and principles that have helped him achieve extraordinary success in the world of finance. One of the most interesting aspects of Ray Dalio's investment philosophy is that he's not afraid to think outside the box when it comes to choosing his investments. He believes in a concept called principles-based investing, which means that he has a set of principles that guide his investment decisions. Instead of focusing on the usual suspects, he often looks for investments that are off the beaten path. In this video, we'll be discussing the top 5 stocks that Ray Dalio holds in his portfolio. So before we get started, please like, comment and subscribe to stay updated on our future videos. Now, without further ado, let's take a look at them. Let's start with the top 5 stocks on the list. P&G. P&G is a global consumer goods company with a long history of success, producing iconic brands like Gillette, Head & Shoulders, Olay, and Tide. Over the years, P&G has consistently delivered strong financial results for its shareholders, and it's no surprise that Ray Dalio holds about 5 million shares of PG stock worth $757.1 million. P&G is also an attractive option for long-term investors because of its consistent dividend payments. PG shares have significantly underperformed the S&P 500 so far in 2023, generating a year-to-date total return of -8.9% through February 16. Procter reported a 0.9% drop in revenue and a 6.9% drop in net earnings in the fourth quarter. Dalio's decision to hold shares of Procter & Gamble Company is likely based on his belief that the company has a strong competitive advantage and a long-term track record of stability and profitability. With its strong financials and potential for future growth, it's no surprise that Ray Dalio has chosen to invest in P&G. Next up, we have Johnson & Johnson, J&J. J&J is an American multinational pharmaceutical, medical devices, and consumer packaged goods manufacturer. It is one of the world's most valuable companies and is the largest healthcare company in the world. With its diversified business, J&J is a great investment, which is why Ray Dalio chose to invest in it. Dalio first started loading up on Johnson & Johnson during the initial U.S. COVID-19 outbreak in the first quarter of 2020. J&J has been around for more than 130 years and is known for its long-term performance and steady dividend payments. Johnson & Johnson's revenue declined 4.4% in the fourth quarter, but the company's plan to spin off its consumer business into a new public company in 2023 could serve as a bullish catalyst. Bridgewater trimmed its exposure to Johnson & Johnson significantly in the fourth quarter, selling more than 1.14 million shares. However, the firm still owns 3.56 million shares of J&J stock worth more than $630 million. Overall, Johnson & Johnson is a solid company and is a great pick for investors who are looking for steady returns and consistent dividend payments. Ray Dalio's decision to invest in this stock is further testament to its long-term potential. The third stock on the list is Pepsi. Ray Dalio holds a significant stake in PepsiCo Inc. Pep, an American multinational food, snack, and beverage corporation. The company owns several well-known brands, such as Lay's, Gatorade, Tropicana, and Quaker Oats. Like other defensive stocks, PepsiCo shares have lagged the S&P 500 so far in 2023, generating a year-to-date total loss of 2.9% through February 16. In addition, PepsiCo pays a regular dividend of $4.60 per share annually, which makes it an attractive pick for dividend-seeking investors. Dalio has owned PepsiCo shares since the first quarter of 2020, but he reduced his stake by about 24% in the fourth quarter. Ray Dalio believes that PepsiCo is well positioned to capitalize on global consumption trends and has held this stock for a long time. He values companies like PepsiCo that are stable, generates consistent cash flow, pay dividends, and have the potential for long-term capital appreciation. As a result, he continues to view Pep favorably despite its current high valuation levels compared to its peers. Bridgewater still holds roughly 3.02 million shares of Pep stock worth more than $545.6 million. He expects it to remain one of his top holdings going forward due to its consistent performance over the years. Ray Dalio understands that investing in stocks with solid fundamentals will help him build a successful portfolio over the long term, and he certainly sees PepsiCo as one of those stocks. Next up, we have Coca-Cola. Ray Dalio has long been an investor in the iconic Coca-Cola Co. He has held the stock for many years, citing the company's long-term success as one of the reasons for its inclusion in his portfolio. Coca-Cola is a classic example of a steady growth stock with excellent potential for long-term profits. In the fourth quarter, Coca-Cola reported 7% revenue growth but a 1% drop in global unit case volume. Coca-Cola has also been a top long-term holding of fellow billionaire and Berkshire Hathaway CEO Warren Buffett, putting Dalio in good company. Bridgewater holds roughly 8.4 million shares of Co stock worth more than $535.6 million. The company is known for its strong focus on innovation, with a number of new product launches in recent years. This includes the launch of Coke Zero Sugar, which has quickly become a major hit with consumers around the world. The company has also a range of healthier options, such as Diet Coke and Coke Life. Coca-Cola is a safe bet for any investor looking to take advantage of the company's long-term success, and Ray Dalio's decision to hold onto the stock speaks volumes about his faith in its long-term potential. The first on the list is IEMG. Among the many investments in Ray Dalio's portfolio, the iShares Core MSCI Emerging Markets ETF, IEMG, stands out. This exchange-traded fund, ETF, offers exposure to some of the largest and most liquid stocks in emerging markets, including China, India, Mexico, Brazil, and South Korea. This ETF includes more than 800 companies and has an annual expense ratio of 0.14%, making it one of the most cost-effective ways to gain exposure to the high growth potential of emerging markets. Dalio appears to be taking a more diversified approach to China via the IEMG fund, an emerging market ETF that is only around 28% exposed to China. After selling 347,293 shares in the fourth quarter, Dalio now holds more than 14.5 million shares of the IEMG fund worth about $679.6 million. By investing in IEMG, Ray Dalio is positioning himself to benefit from long-term growth opportunities across different countries. And that's it for our rundown of the top 5 stocks that Ray Dalio is currently holding in his portfolio. As one of the most successful investors in the world, it's always interesting to see where he's placing his bets. From Procter & Gamble to iShares Core MSCI Emerging Markets ETF, these stocks all have the potential to deliver strong returns for investors over the long term. But as always, it's important to remember that investing comes with risks and there's no guarantee of success. So, if you're considering investing in any of these stocks, make sure to do your own research and consult with a financial advisor to determine if they're right for your portfolio. However, taking inspiration from successful investors like Ray Dalio can be a valuable starting point for building a strong investment portfolio. Thank you for watching, and if you enjoyed this video, be sure to like and subscribe for more content like this in the future.